Okay, so this is a financial reporting and analysis. Financial reporting and analysis, which is it is under the intermediate level. It is under the intermediate level. And here we have some topics, topic 1 to topic 7. That is the main topic, topic 1 to topic 7. But we have subtopic. Like topic 1 under this unit is accounting for asset and liabilities. Accounting for asset and liabilities, which you're going to cover the investment property, about the current and the deferred tax, the government grants, the provision and contingent liabilities, the provision and contingent liabilities. So if you look at this topic 1, where there is a lot of computation is that is the current or the income tax, that is IAS 12. So examiner most of the time they test this subtopic of tax. And yeah, the others are theory. Maybe they will ask you, because remember the theory cover around 25%, and where the examiner will start giving you more calculation in this unit is topic 2, where in this topic 2 we are looking for the specialized transaction. This specialized transaction is accounting for construction, accounting for borrowing cost, and then the third topic is the preparation of financial statement over different entities. Maybe for an entity like we said the professional firm, the partnership, the lease, and also the pension, also the cooperative societies and agricultural activities. Also, you are going to cover in topic 3. Then topic 4 is about the preparation of a published account or the published statement So in this topic of a published statement, we don't have a specific area which we said you are going to cover this in this topic, but it is the general knowledge of financial accounting in general. Like the examiner is testing how you can. Do you remember how to account for the taxes? Do you remember how to account for the depreciation? Do you remember how to classify the assets, liabilities, incomes, and all that? So in this topic, the examiner is testing the general knowledge, And then we have topic 5, which is the main topic in this financial reporting analysis, which is accounting for or the group's accounts. We have the group's account, which the examiner has also changed the approach of this group account. You only look at the income statement, the published, and the statement of we don't have the statement of cash flow. It was there in the previous syllabus, but with the current syllabus, we don't have the statement of the cash flow. Also, discontinued operation, it was removed, so we don't have it here. And eventually the branches, and the last one is analyzing the financial statement, which we're going to use the ratios. We are going to use the ratios to analyze this financial statement. So that's what you are going to cover in this financial reporting and analysis. Now we want to look at this accounting for the specialized transaction. Specifically for borrowing cost. Specifically for borrowing cost. So you can write the borrowing cost. Borrowing cost. So here we have two terms. Which is borrowing. So when you say borrowing, is about getting financial support or obtaining financial financial support, obtaining financial support. When you say borrowing, is about obtaining what? Is about obtaining financial support. And then what about the cost? What about the cost? So the cost here refers to what? To the cost, or we don't need to repeat ourselves, refer to the expenditure or expenses. It's referred to expenditure. It's referred to expenditure incurred when sourcing or obtaining, when obtaining a financial support. When obtaining financial support. So when we talk of the cost, is the expenditure we incur to obtain what? The financial support. That's what's the definition of the borrowing cost. So if someone asks you to define the borrowing cost, because in CPA, if you want to pass CPA very easily, don't cram. So that's why unapatanga mkifanya revision, unaona mtu jamaa anajua hii, akisema hii iko kwa kitabu, but exam ikitoka anakuambia ile paper unajua nilianguka because alicram. So in CASNEP papers, I know you guys, you have done some papers before. So in CASNEP, it is good to understand the concept. So once you have the concept, it will be very easy to pass that paper. It will be very easy to pass that paper. So if someone asks you to define what is the borrowing cost, you can say this is it is the cost incurred. It is the cost incurred when obtaining the financial. Instead of using the financial support, you can say financial facility, or the financial facility. So what are these financial, the financial facility or the borrowing we are doing here? So the borrowing here, we are talking about the loans. So if you borrow loan, this is a financial obligation of the company, or the company is not in a good position to finance their operation. So what they do, they go for loan. So anytime you go for loan, you incur certain cost. And those costs we classify as the borrowing cost. So this cost will be what? The interest. We are talking of interest. You are talking of interest because you have to pay interest on a monthly basis or on an annual basis or an annual basis. So on an annual basis. So basically, interest is one of the components of the borrowing cost. Maybe we can write so that we can explain the components of borrowing cost, the component of borrowing cost. So the first component is the interest. The first component is the interest on overdraft. Interest on overdraft, on long-term or a long-term loan. So the one of the component of the borrowing cost is the interest on overdraft, or interest on long-term loan, or interest on long-term loan. And then the second component is amortization of discount, and the premium related to the borrowings, and the premium related to the what? To the borrowing, and the premium related to the borrowing, and the premium related to the borrowing. So what is amortization? I know you have done financial accounting. You are still fresh from foundation level. You are still fresh from the foundation level. What is amortization? What is amortization? So amortization is basically the loss of value of intangible asset, of the intangible asset, the loss of value of intangible asset. It is the same as depreciation. It is the same as depreciation, but depreciation is for non-current asset, So you'll find that, for example, if you go to the bank, they will give you the loan, but they still give you a discount. So for example, they say that we are giving you a $10,000. We are giving you $10,000 as the principal amount, as the principal amount. So $10,000 as a principal amount, and then they will give you also the interest. The interest per annum. The interest per annum is 10%. The interest per annum is 10%. So each year you are going to pay 10% of this as what? As an interest. So that is a cost. Because you are going to incur 10% of this principal amount every year. So that is a cost. But also they will tell you, I'll give you 1% as a discount. I will give you 1% as a discount. I will give you 1% as a discount. That's when now amortization over discounts come in. That's when the amortization over discounts come in. Because we will not say, because I'm paying a 10% of this, I will say 10% of this minus this. No. So there's how we account for that. And then the number 4 component of borrowing cost is the finance cost. The finance cost, and the 4th component or the 3rd component, the finance cost. That is number 3. And number 4, we are talking of the exchange rate. We are talking of exchange rate. Remember, most of the companies, they do source the finance from what? Outside the country. Or there's other companies. If you're working as an accountant in a certain company, I know you know this. Each and every company, they have more than one bank account. They have the Kenya shilling, and also they have a dollar account. So each time they source the loan from maybe Equity or a Prime Bank, they source a loan, they might say that from that loan, can you transfer to our dollar account? So if they transfer to the dollar account, they will incur an exchange rate. So maybe the current dollar rate is that 1.10%, 10 cents. This is the current rate of a dollar. So maybe the bank, if you have done financial management, the bank always what? Does it wanauza at a profit ama wananunua at a profit? So ukifika advanced level utajua kufanya money market. So if this is this is the NCBA or the central bank, the CBK rate, and that the bank will not sell you at the CBK rate. So maybe they will sell you at what? At 136.5 or the below that one. That is at 132.10. So if the bank sells you at this one, they're making a profit. If they're selling you at 132, they are making a loss because this is the CBK rate. So they are making a loss. So if they are making a loss, then we have to account for this loss. And this loss is what we refer as a cost. So utapata hapa lazima uaccount what is called exchange loss. Hapo kwa P&L under comprehensive income, we have to account for exchange loss. So that is all about the component of the components of borrowing cost, the component of the borrowing cost, the component of the borrowing cost, the component of the borrowing cost. So examiner test the last sitting paper, which is December 2024. There was a question there for borrowing cost. Maybe we can't just do that. So kuna other theories which kwa hii borrowing cost unaulizwa, when do we capitalize the borrowing cost? Examiner anaweza kuuliza, when do we capitalize this borrowing cost? When do we capitalize this borrowing cost? Because not every loan yenye umechukua kwa bank inakuwa capitalized. Hapana. So there's some criteria which you have to follow for these loans to be capitalized, which na hii standard tutakuwa tukiangalia kwa IAS 23. Remember financial reporting, we follow the standards. So for us to capitalize this borrowing cost, we have to go back to the standards IAS 23 and look at what is the IAS saying. So the IAS state that expenditure or for borrowing costs to be capitalized, you must incur expenditure on an asset. You must have an expenditure. Kama unajenga nyumba lazima kuwa na expenditure. Ndio useme hii pesa nilitumia kujenga hii nyumba na iza capitalize. So lazima kuwa na expenditure. That is the first principles according to the IAS 2023. Another one is that the borrowing costs are incurred. So you must incur these other expenditure like the interest, the exchange gain. So you must incur that one. And also another principle is that activity necessary to prepare the asset for its intended use or a sales in a progress. It sells in a progress. So hizo ni some of the theories which lazima ujue. Unless kuna swali hapo, then we go to look at the illustration ya last sitting December 2024 question. Kama kuna past paper, kama una unaweza download hapa online. Past papers imejaa siku hizi online. Unaweza pata hapo online. Waandika tu Casnep past paper CPA. I think I can't share that one if I have one here so that you can be able, kama uja download, tutaangalia. So, Casnep papers. Financial reporting. It was an easy paper. This is it. So we have question 1. This is a question 1, December 2024. Question 1B. So the question say that Potters Limited borrowed 120 million on 1st July. That is question 1. On 1st July 2023 at the rate of what? 9% per annum to finance 2 capital projects, namely Cometic and robotic projects. The funds were invested in 2 projects as follows. So we have the 2 projects with the respective months. And then we have been told unutilized fund on 1st July 2023 were invested temporarily at the rate of 7% per annum. So any funds which was available after capitalizing or after spending that cost walikuwa wanaeka kwa investment, which your investment ilikuwa inaleta 7% per annum as an income. So the examiner requiring you to what? To determine the borrowing cost to be capitalized for each period of the project as at 30th June 2024. And also Roman 2, to compute the value of the investment in the books of Potters Limited as at 30th June 2024, coming to total of 6 marks. So that is a free marks. So how do you approach such a question? How do you approach such a question? Remember, our interest is to get the cost. Our interest is to get the cost. We don't mind with the amount they borrow, but our interest is to get the cost. And the main cost in this question is the interest. The main cost in this question is the interest. Is the interest. Is the interest. Is the interest. So we'll have to get the interest from 1st July 2023 to December, to that 1st December, that 2020, this is 2023 to 2024. No, we can't have to 2023. That is 6 months. That is 6 months. From 1st July 2023 to December 2023, this is 6 months. This is 6 months. So this is for which project? This is, we can have C project here, and also the R project, which is robotic project. Robotic project. So which and then we can have another one from also here we can have the same from this one, July, and then here we'll start. Remember, we are interest. We account interest for only 1 year. I hope you know that expenditure and income only cover 1 year. So we'll have January 2024 to what? July 2024. That is 1 year from 2023 to 2024. So also we'll have for project C and also the project R. The project R. Now, the total cost is 120 million. So we are not interested in 120 million, but we are interested in the breakdown here. If you add 20 plus 20 plus 40 plus 40, you will get a sum of 120 million. I hope so. So you can confirm. Okay, this is zote. I hope tunapata 120. So we will compute first for 20 from July to December 2023. So nitakuja hapa ni take 20 million. This is in million. So 20 million times the interest rate, which is 9%. So 20 million times interest rate of 9. And then I do a portion times 6 over 12, times 6 over 12. That is for project, the cosmetic. And then the other one is 40,000 or 40 million times 9% times 6 over 12. That one will give us the first interest of the 6 months. The first interest of the 6 months. Kwa hii unit hatuwezi fanya bila calculator. So tafuta calculator. 20 million times 0.09 times 6, we divide by 12, get 0.9. These are in million, 0.9. What about the other project? 40 times 0.9 times 6, we divide by 12. We are getting 1.8. Now, let's get now from January 2024 to July 2024. So, tutatumia which cost? Are we using 20? So, kuanzia July up to December alikuwa amechukua 20 million. And then from January to July pia akachukua another 20 million. So kumaanisha in this period tutakuwa tunafanya interest ya the first 20 million plus the second 20 million. So here we are doing about so tutafanya in accumulative. So our total cost here will be what? 40 million. The 40 million. The first 20 and the second 20. Total will be what? 40 million. And then we multiply by the rates, 9% times 6 over 12. Times 6 over 12. Hiyo itatupea ngapi? I think will be the same with this, which itatupea 1.8. Itatupea 1.8. And then the same on the project robotic. Robotic alichukua 40 million for the first 6 months, and then for the last 6 months also akachukua 40 million, but tunataka the cumulative value of the total cost. So 40 plus 40 will be 80 million times 9% times 6 over 12. Hiyo inatupea ngapi? So 80 times 0.09 times 6, we divide by 12. That one give us 3.6. At the two, itatupea ngapi? 7 point what? 0.9 plus 0.8 plus 1.8 inatupea 2.4, and then another one is 1.8 plus 3.6 inatupea 5.4. So that is the total cost. That is the total cost you are going to incur. That is the total cost you are going to incur. That is the interest. So utakuja ulipe interest ya 2.4 million and another one is 5.4 million. But remember, this is the cost. But with this, kuna profit unai generate. There's still an income you are generating from this cost, because you are reinvesting 7%. So any balance of this amount you are investing 7%. So we are going to do a 7% of the last period, which is the 6 month, but without the cumulative value. So the interest, I will come and say less the interest income, the interest income. The interest income is 20%, 20 million times 7%. That is the rate of the interest. We multiply by 6 months. The other one will be 40 times 7% times 6 over 12 times 6 over 12. So hiyo itatupea ngapi? Nani akona calculator? So ukichukua 20 times 0.07 times 6, we divide by 12, we are getting a 0.7, and the other one is 40 times 0.07, and then times 6, we divide by 12, we are getting 1.4. Subtract, because in cost na in income, so we have to subtract to get the net cost. So subtract. So if I subtract 2.4 minus 0.7, I'm getting a 1.7. This is 1.7, and then the other one is 54 minus 1.4. So this is 4. I'm getting 4. So we have answered the first part of this question, which is determine the borrowing cost to be capitalized for each of the project as at 30th June 2024. So this is the cost to be capitalized. Yenye ilikuwa inaenda for 4 marks. And then number two imekuambia compute the value of the investment. In the books of a Porters Limited. The value of the investment in the books of the Porters Limited as at 30th June 2024. That is 2 marks. That one is 2 marks. So that one is very simple. The total value of the investment. So for this project C, what is the total value of the investment before this cost? 20,000 plus 20 million. So we have 20 million for project C. 20 million plus another 20 million, which is coming to 40 million. That is the total cost. And then plus this cost, you are going to pay a net cost of 1.7. So plus 1.7, so itakuja 41.7. Another one, which is R, itakuja 40 million plus 40 million, which is coming to 80 million plus 4 million. So itakuja 84 million. So this is the value we are going to capitalize. to capitalize in the books of that company, So that was the question which ilikuwa very easy, and kama ulikuwa kwa classes zetu ungetuambia mwalimu, si hii swali tulifanya kwa class. Hii swali tulifanya kwa class. So that is the good thing. Ukijoin classes ndio unapata zile concept mwalimu anakupea ni examiner ana test. Unaweza kuwa unatumia zile materials za kitambo and that you are not getting the relevant content and you end up repeating for CPA several times. If you look at that question keenly, the examiner only changed the name of the company and the values. The name of the company and the values, but the questions remain the same. So if you go to the past paper, December 2012, if you go to the past paper, December 2012, question 5D, the examiner give you the same question. They only change the name of the company, the amount, and the anything, and I think, and the year. So ukiangalia 2011 na 2012 imekuambia Assure Limited, ile ingine ilikuwa Porter. Assure Limited borrowed 30 million to finance two projects A and B on 1st July 2011, but the other one is 2023. So it is the same. And that we have been given the project A, 5 million from 1st July 2011, and project B is 10 million. And then January 2012 is 5 million for project A, and project B is 10 million. And then you have been told unutilized fund on 1st July 2011 were invested temporarily at the rate of 7% per annum at the rate interest, and the rate of interest on the loan was 9%. Even the rates ziko the same. Hii ni 7%, hii ni 7% and also 9%. So they were walikuwa wanataka the borrowing cost and also the net asset to be capitalized. So ni the same question. So kama ulifanya, so that is the benefit ukiattend class. Our examiner wamechoka ku set exam. So what they do, they copy paste, or they can divide this value by 2, or they can multiply this value by 2. But the good thing is to understand the concept. So that will make the end of our free session today. And our class, yeah, FR, tuko nayo on that is Wednesday and when. Let me see our class. So kama kuna swali unaweza uliza. So our class tuko nayo on Wednesday and Friday. That is 8 p.m. To 10 p.m. That is our class for financial reporting. So kuna swali. How much do you charge for the pre-recorded videos per unit? So for pre-recorded videos per unit, we charge the full video, that is 2,500 for the full course. Another one, Abdi, is this done for ATD3? No, ATD3, you are not doing financial reporting. So after ATD3, you will be given exemption, and this will be your first unit under the intermediate level. You are going to do the FR, and then company law, and financial management. I hope wale wako kwa comment section nimewajibu wote. So let's meet tomorrow for those who have joined our classes, and then tupatane kesho. Ndio by March hapo tutakuwa almost tukimalizia, ndio April tufanye revision and then to do your exam. So that last paper question ilikuwa very simple. So we meet tomorrow. So thank you and have a good night. ATD2 classes ATD2 classes pia tuko na timetable. So ukiangalia admin hapo wako na timetable. but we cover the common unit. The common unit, so like CPA ukifanya 82 tuta combine the financial accounting and the CPA, the same concept, the same unit, the same topics. That is 82 and CPA we combined for FA. And also the other units zenye ziko common, then tunafanya separate. We have the timetable. So let's communicate more on the group. So thank you so much.